Yeah, look, most of the profit growth has obviously come from improving our interest margins overall, and obviously we've seen significant improvements in the bad debt area year on year. Also, what we've seen is good progress on managing some of the cost growth in Kiwibank as well. So if you add all that together, what you see is a really strong performance, and a strong improvement on the year before.
And that interest margin growth, is that basically due to people moving to the floating?
Yeah, some of it's floating, some of it's better interest margin management is how I'd describe it, and some of it's actually seeing more people coming into the variable rate lending in the market, given the shape of the interest rate curve that we're seeing at the moment.
Sure, and you mentioned in the press conference that there was a slight movement back towards fixed rates.
Yeah, it hasn't been massive. I mean, I think what we're seeing is there's some people who are looking to lock in for the longer term who are choosing some of that, but it's really not a massive move at this point. I'd say slight is how I'd describe it. It's more those that are looking to lock in a rate to have the certainty. But as I mentioned earlier, one of the things we are seeing is we're seeing more people paying back debt overall, so that flexibility of being on the variable rate is quite attractive, and getting their positions and getting their balance sheet into a stronger position, if you like,
so
at the household level.
There still is quite a lot of deleveraging.
Yeah, fair amount of debt repayment going on in the market, and obviously, we notice it a little bit more now that we're a little bit bigger and our portfolios are a little bit longer, or older, if you like.
Do you expect to see that for another year or two?
Yeah, I think we will. I think we'll see that. People are pretty conservative when it comes to debt at the moment, so I think we will see that for a little bit longer. So that and that makes sense in the environment that people are in, where perhaps they're a little more uncertain about the economy and how things are going, and a little wary, sort of coming out the back at the end of the GFC, and they're probably looking offshore, saying, I'm not sure what's going on over there, and how's that going to impact us? And we haven't got crystal balls, so what should I do? Maybe I should just be being conservative in my debt.
And you guys are watching the offshore markets. Obviously, you've got some offshore funding.
Yes,
at the moment. So what are you thinking in terms of that, in terms of tapping those markets again? You'd like to?
Yeah, we'd like to tap the markets again. Obviously, it depends on the shape of those markets and how things are travelling. I wouldn't say right now, given there's been some challenges, but we are getting a little bit of wholesale funding and offshore funding away offshore at the moment, and we have been. It's costing us a little bit more than what we had before. What it had cost us in the past.
How much more?
I wouldn't want to get into that, but a little bit more, I would say. It's not massive, and obviously in any of your funding profiles you've got to look at your mix. But obviously Kiwibank will look to have more offshore funding over time. We'll also want to continue to maintain a strong local presence, so that's really important to us as well. So what I'm saying to you is, we're keeping an eye on it. We'll watch it closely, and we'll look to obviously move into that area if and when we see the markets are appropriate.
And the desire to have more offshore funding over time, is that diversification, or is that because you don't think the local deposit market can give you?
No, there's two things. There's two things there. One is diversification, but I still believe, as I said before, that we need a very strong retail funding base, and we have that. And I think that longer term for Kiwibank, that's very, very important. But secondly, with some of the diversification, obviously the offshore market particularly gives us the opportunity to what we'd call term out that debt. So what that means is sort of locking money in for longer terms as opposed to having it on the shorter terms.
And
the offshore, and that's good for your core funding ratio. It's also good just discipline generally in managing the balance sheet. So I think that's giving us that flexibility is quite important, and you do see a lot more appetite for those longer term investments offshore, and in those more common instruments that you see all the banks using offshore to raise funds.
Right. And in terms of those profits that you've been making, they've all been reinvested in the bank so far. You mentioned a $50 million
injection. Yeah, there was a $50 million injection by the parent throughout the period.
Right, and so in the coming years, I think analysts are saying that you need another sort of $200 million worth of capital to become self-sustaining and paying dividends back to the government. Is that a fair?
Yeah, well, I think probably it's hard to estimate how much we're going to need, and we're certainly not going to disclose it, because there's two things at play here. One is globally what you're seeing all banks are required to have stronger capital ratios with Basel III and the requirements coming there. So the first thing is we need to be on a stronger regulatory capital track. Now that will involve significantly more capital in the order of the sort of numbers you're talking about, just in that alone.
Okay, right.
Yeah. And then outside of that, you've obviously got the degree of growth and aggression that Kiwibank wants to have. Now that, and we talked a little before about some diversification into some of the small business markets, for example. Now all of that will require capital. Now the majority of that capital will come from our profits and from our retained earnings, but there will be a need for additional capital.
So that $200 million figure could be a minimum over the next 4 years?
Could be.
Right, and just in terms of the mortgage market finally, What are you seeing around the country in terms of that mortgage market growth? Is there, is it an Auckland story?
Yeah, look, there hasn't been a lot of mortgage market growth generally. I think the only sort of little signs of growth we've seen in the last period has really been Auckland. We have seen obviously growth, because you look at our numbers, we're seeing growth, and we're seeing it right across the country. But that's mostly driven by switching and people joining the bank. So, and we are seeing, believe it or not, some of that growth, right through the whole country, and we're seeing growth in Canterbury as well, and Christchurch as well, as we stand by the people of Canterbury. So I think, right across the board, but the only one that stands out at the moment, I would say, would be mostly an Auckland story.
Next few years, what would you see? Would you see the rest of the country picking up?
I think what we will see is a bit of a regional pickup, particularly given the strength of the agri sector at the moment. So you're likely to see the provinces get a little bit stronger, in my view. It's only my personal view. I'm not an economist, but certainly if you look at how things are travelling, that looks okay. I think we'll see continued strength in Auckland and in the metro areas as well. But I don't think you're necessarily going back to the heady days that we've come from, and certainly see more gradual growth in that respect. And we're not planning on massive lifts in growth overall. But as I say, the only one that's really picking up at the moment and would be likely to pick up going forward, I think, is Auckland, in terms of any sort of chase. Now, the issue on that chase, if you like, or that pickup in the market, it's largely been a supply issue. So, how much supply there is in the market. So the real question is what happens there. What are consumers' appetites to want to get out there and start upgrading the home and those sorts of things. And if you think about where their attitudes are to debt repayment and other things at the moment, and what we're seeing anyway, the question is how long. And it probably really depends on the confidence in the economy long term.